Hi there, I'm Jennifer Lee, Senior Economist at BMO Capital Markets. Well, lots has changed over the past few weeks. Any thought that the Federal Reserve would be raising rates this summer, or the Bank of England possibly doing so before the end of the year, went right out the window. After the June 23rd referendum in the UK saw over 51% of registered voters in the UK voting to leave the European Union. Global financial markets were caught off guard a little bit by this result, and we have seen a massive sell-off in global equity markets, a big rally in bond markets, and the pound hitting a 31-year low as of this morning. Basically, what had happened is that markets seem to be pricing in fully a Remain vote in the week to the lead up in the week ahead of the referendum. So again, the results caught everyone off guard. So two things that financial markets hate, uncertainty and the unknown, and those two factors are very much at play right now. So the British people have spoken, they want out. So what next? First things first, we need a new leader of the Conservative Party, or of the Conservatives. Prime Minister David Cameron announced his intention to resign from his post soon after the referendum results were known. So now we have a number of people jockeying for position for the leadership of the country, including former London Mayor Boris Johnson, who was quite strong in his role in the Brexit campaign, or the Leave campaign. Now, after that, things get a little bit uncertain. Will there be another general election held after the new leader is announced? That is up in the air. The new leader will have to pick a new chancellor of the Exchequer to decide how fiscal policy will come into play. Now, recall the most recent fiscal plan that we have right now from Chancellor George Osborne is that he had threatened to raise income taxes, and cut spending on social services and healthcare in the event of a Brexit. So whether or not he is going to stay in his role is another question. Thirdly, is this referendum even legal? Now, technically it is not, but it would be political suicide for MPs to go against what their constituents have been asking for. And while we are speaking, by the way, a new petition is making its way around the UK, asking for a new referendum on this issue. So far, we've had 3 million people sign up, which is no small feat in itself. But given that over 17 million people voted for Brexit, you need a little bit more than 3 million people to sign this petition to get this thing off the ground. And finally, the new leader will have to formally announce to the European Union that the UK is leaving the EU. And that's also otherwise known as Article 50. Now, once that is activated, the clock starts, and in 2 years from that point, we will have to the UK and the EU will have to negotiate how things will take place. New trade deals will have to be negotiated. What will happen to EU citizens working in the UK, or UK citizens working in the EU? So all this stuff will have to be ironed out. So a lot of this uncertainty is playing out in financial markets, and that's one thing that kept the Fed on hold in June. In fact, Fed Chair Yellen did say that Brexit was a big factor in their decision to remain on hold on June 15th. So we have basically taken off any rate hikes for the summer off the table for the Fed. But we believe that once the smoke clears, once the clouds clear towards the end of the year, we have more clarity on how things are going to play out. We think that the U.S. economy is going to be strong enough to handle a rate hike by the end of the year in December. But basically, it'd be one and done for 2016 as far as the Fed is concerned. Now, for the Bank of Canada, because we pushed out our Fed call, we are also not expecting rate hikes to come into play until probably the fourth quarter of 2017, which is about a quarter after what we had initially expected the Bank of Canada to come in at for rate hikes. So again, no Bank of Canada rate hikes until 2017 Q4. But as we know, that seems like eons away, and as we have seen, lots can happen between then and now. Thank you.